Hello, I'm Jason Strongahead. This is going to be the new format I wanted to test out and see whether is it nicer for me to explain the stock market analysis to you guys. So please leave me a comment if you feel this method is better or the old method is better, okay? We are now into the 9th week of the stock market crash. And today I want to share with you, right, why is it that there's so much bad news over here and the market is still rising? Is it possible that the market can rise too fast, too furious? So the market has been crazy. The market has been going up a lot. And the last week closing market is still up. So those who have really bought into the market, I'm very sure you are now very happy. For those who haven't got into the market, I believe that you believe the market is going to go down some more. So this is just a dead cat bounce. So which one is it going to be? Is it going to be up or is it going to be down? Now let's take a look. The market right now has plunged a lot and it has also rallied a lot. So at this very moment, is it going to go up or is it going to go down? Now, we won't know whether the market is going to go up or is it going to go down. Some people believe that this is just a dead cat bounce. Now, what do you mean by a dead cat bounce? A dead cat bounce means, right, okay, after a huge plunge, that will followed by a big rally. And at this big rally, it's just going to trap everyone who believes that the market has recovered. As soon as you bought in over here or you bought in over here, then it will go down even lower than the previous low. Okay, so that is what they mean by a dead cat bounce. So are we in for a dead cat bounce? Now, if you believe that we are in for a dead cat bounce, so where do you think it's going to hit? Now, if the first, based on my technical analysis, okay, so this will be the resistance zone. That means like the ceiling, where a lot of people believe that if price were to hit this zone, the market will come back down because it's considered too expensive. It's unbelievable. How can the price go up so much? So if you believe in that, then we are already near the ceiling. And some people already believe that we are at the ceiling. Yeah. So the moment we are hitting over here, it is a danger zone. So you will come back down. And you will come back down lower than the previous low, which is here. That means, right, the market probably will go down to maybe about 16,000, 15,000, 14,000 range. Okay, so we never know when is the absolute bottom, but this could be a possibility that the market can go down. And a lot of people believe in that. Now, some people say, no, this is going to be worse. We should be looking at the 2008 crash. So if you look at it right now, we are here. We already recovered about 35%. And if you believe that it is like the 2008, so this one in 2008, when the market plunged big time, and then you rallied to about 24% after it came back down a lot more. So if you believe that is the case, then possibly, right, you believe that the market is going to go down. It's going to go down like maybe back to the 2008 range, like 9,000 point, 8,000 point, 7,000 point range. So if that really happens, oh my God, yeah, that is great value, correct or not? Okay, and some people say, no, Jason, you are looking at the wrong side of the telescope. How can you not realize that this is going to be worse than the Great Depression? So we probably will mimic the Great Depression. So if you look at the Great Depression, yeah, in the 2009, 2029, 1929 crash, so it came down a lot, retraced 36%. So it's very similar, retraced 35%. Okay, and then it will go down some more. So if you believe that it's going to be like that, then maybe we are looking at, oh my God, some people told me that at least the Dow will experience a drop to a 3,000 point. Some people believe, no, 3,000 is too little. It will at least go to 1,000 point. Some people say, no, history will repeat itself again. It's just a matter of time. And this is the right time. So it will go down to, oh my God, at 100 points. So if you buy now, Dow Jones go down all the way to 100 point. Wow, the feeling is like the world is coming to an end, man. Okay, so this could be the possibility. And we will never know. Is it going to happen? Of course it's possible. We will never know. However, let's take a look at history. So history will be our best bet because we are never able to understand or we will never be able to foresee what the future lies ahead. But we can use history to help us understand, right, what could be the possibility. I'm not saying this is going to be absolute. I'm just looking at the possibility. So let's take a look at the possibility over here. Okay, over the last about about 100 years now, you can say that, right? Okay, all the bear markets. Okay, in the bear market, only a few bear market has corrected more than 40%. Yeah, so I've highlighted over here in red. And the rest of the market, the rest of the bear market situation, it has only corrected up to about 20 to 30% of the time. And which one do you think it will be? Okay, are we going to be in the 35% of the time whereby we will correct more than 40%, or we'll be in a correction that is going to mirror 65% of the time whereby we already more or less corrected and bottom already? Yeah, so I don't know, you can take a look and you have to take one side, right? So only when you take one side, then you understand whether is it time to buy or is it not time to buy. At least you know how to use this information to help you make a decision. Okay, so which one would it be? I really won't know. So what if those people who believe that this is going to be a big plunge and they are wrong? This time around, it's 65% of the time whereby the market has already corrected more than 20 to 30% and it has already bottomed. So if that is the case, what is going to happen? That means the market is going to go back up, what? Yeah. And is it possible? Some people say, okay, fine. Even if the market were to bottom already and go back up, yeah, this is too fast. It's impossible. Now you have to remember, a bull market, the recovery can rally very fast and very hard. Yeah. So look at history again. Yeah. Based on the history, now is this considered too, whatever that it is happening right now? Okay. Is it considered a fast rally that is recovered too fast? Yeah. So based on observation, right, out of the 13 bear market recovery, 7 of the 13, that means, right, it's a 53% chance that we will experience a very strong recovery. And this strong recovery would account for 40% of the overall year returns, right? First year returns, okay? If within the first 3 months. So take a look over here, okay? So can you see this 1932 plunge, this 1949 plunge, this 1970 plunge, this 1982 plunge, 1987 plunge, 2002 plunge, and 2009 plunge. Okay, all the plunge. Okay, within the first 3 months, yeah, it has accounted for a lot more. Yeah, a lot of returns, right? Within the first 12 months. That means, see, this within the first 3 months, it has recovered in 1932. Within the first 3 months, the market has recovered 92.3%. And the first 12 months, it has recovered 120.9%. And the first 3 months, it accounts for 76% of the 12 months return, the first 12 month return. So the first 3 months, if you miss this bull run, you have actually missed quite a lot of return, a significant amount of return. Yeah. So is there a possibility that the market can bounce up a lot and very fast? Yeah, there's a possibility. It happens so many times already. Okay. So the other thing I wanted to share is V-shaped recovery actually is very common. Now, why did I say it's very common? So I took the last all the bear runs, right? Okay, in the last few decades. So you take a look in 1932, the bear market. Can you see the recovery? Does it look like V-shape to you? 1942, does it look like V-shape to you? 1949, this recovery, does it look like V-shape to you? 1957, this recovery, although the V a bit ugly, but does it look like V-shape to you? 1962, this one, does it look like V-shape to you? Some people argue that this is W. Okay, fine. Maybe W, yeah, but it's not double bottom, right? Okay, and not double dip, I mean. So what about 1966? Does it look like V-shape to you? 1970, does it look like V-shape to you? 1974, does it look like V-shape to you? 1982, does it look like V-shape to you? 1978, does it look like quick V-shape recovery for you? 1990, does it look like V-shape to you? 2002, okay, this one maybe look like W again. And 2009, does it look like V-shape to you? So how about the current one? Huh? So the current one, is it possible that this will be the bottom and recover already? Okay, so if you look at the history, V-shaped recovery is really very, very common. And can the market rise too high, too fast? Can or not? So let's take a look. Okay, in 1957, okay, in 1957, a lot of top industrialists, they feel that the market has recovered too far and too fast. So it was reported during one of the market rallies, right? Okay, during the bear rallies, they call it the bear rallies. So the bull run in the end lasted for 3 years. Even though when they think it's impossible, it continued to stay. And 1 year later, they still feel that how come the stock is still going? How come there's no reason for it to go up? How come it's still going up? So after they say that, the bull run still never end. Okay? And in 1962 bear market, after the market has plunged, and when the bull rally started, some analysts, they feel that this market has moved too far, too fast. It should plunge for no reason. And the bull run lasted for 4 years. Oh my God. How about this 1974 bear rally? So this 1974 bear market plunge. After that, some people say this is the like the dead cat bounce or something, like beware, beware. Huh? Okay, so 1 year later, yeah, not 1 year lah. Okay, just following year, the traders are very, very convinced that the market has gone too far, too fast already. But look at it, the bull market lasted for 74 months with a return of 126%. And in 1982 bear market. So during this bear market, after the bear market plunged, and then there's a rally, right? Analysts concluded that the recent rallies in both the stocks and the bonds, right, has gone too far, too fast. So what happened? This bull market was only 2 days old, and they say that it's really too fast. They say it's ridiculous. But what happened then? This bull run lasted until 1987 with a 229% return. Okay, and some more. So in 1990, this bear, okay, after this bear plunge, poop, and then after that there was a rally, right? So in 1992, 2 years later, okay, the investors are troubled and they are very worried. The stock market has come too far already. It's time to go down. And look at what happened. The bull run lasted for 8 more years. Yeah, and in 2002, some people say that after this market plunge, okay, and then there was a rally, right? And a lot of people say that the market has done too far, too fast. All the investors can expect a 7 to 8% correction anytime soon. And this was reported, okay, only at the 4th month of the new bull run. And this bull run lasted until 2007. Okay, in 2009. So when the market finally recovered, right, boom, and a lot of people say this market is soaring, it has gone too far, too fast. And look at what happened. It lasted until 2019, until this COVID, this global outbreak, right? Okay, so right now, bam, the opinion, the stock market rebound is too bullish, but a bit too far, too fast, right? Danger lures. So does it sound familiar? Okay, is there a possibility that this bull run will continue, never end? There's a possibility, right? Okay, yeah. So understand that there is no set amount. Okay, bull market are allowed to rise, right, before it will fall again. So there's no, you do not judge the whole market in a very, very rationalized and precise manner, because the market is not driven by facts, it's driven by sentiment. You have to understand that. It's driven by greed and fear. Okay, so is it possible that the market can rise too far, too fast? The answer is yes. Yeah, so hopefully you have managed to pick up some information and insight from my video, and stay tuned, continue to stay tuned, because the next video I'm about to share with you, why is it that when unemployment rate is high, the market can continue to go up, yeah. And of course, don't end your video yet. I have a post-credit scene for you. Enjoy. Kill the coronavirus first, lor.
It doesn't work. Go shower better.
Don't work, man?
Yeah.
Okay.